what's going on, Best Family? My name is Stock Market J, and we talking about fiat currency today. All right, guys. So, a fiat money is a type of currency that is declared a legal tender by a government, but has no intrinsic or fixed value, and is not backed by any tangible asset such as gold and silver. Fiat currency values are guaranteed by the government that issues the money, and the government can control the supply of money in circulation in response to economic fluctuations. What this means is, in essence, the money that we use today, the dollar, the $5, $10, $50, and $100 bill, are only backed by the full faith and credit of the United States government. Okay, and they also have the ability to control the money in circulation during different economic fluctuations. So they control the booms and the bust cycles by way of printing money or pulling money out of the economy. So this is known as quantitative tightening and quantitative easing. When the government is selling bonds, they're pulling money out of the economy. They're taking liquidity out of the economy. They're raising interest rates, right? This is known as quantitative tightening. When they're going into an easing cycle, they're buying bonds, which is going to be adding liquidity into the markets, essentially dropping the interest rates, which is going to be enticing consumers, businesses, and the like to want to borrow money, essentially creating more money out of thin air. When the government goes into quantitative easing cycles, they're printing money. Okay, they're printing money, and of course, as we understand, the printing of money is inflationary in nature. So when they go through these cycles of printing money, they're able to do this because of the dollar bill being fiat currency. It's not backed by gold. If it was backed by gold, right, if it was on the gold standard, they wouldn't be able to print money because the dollar is correlated to its value in gold, right? And every time throughout history, when the United States decided that they wanted to print money to fund, whether it was a war, whether it was to fund government, expenditures and things of the like, they always took the dollar off the gold standard. And what they ended up doing is they took it off the gold standard so they could print money, and then they could do whatever they needed to do, fund what they needed to fund, and eventually, of course, this led to inflation. It doesn't happen overnight, but over the course of 2 to 5 years, it leads to inflation, which drives the economy up. Prices go up, services go up, goods go up. The value of your dollar comes down. Okay, this is due to fiat currency. So if the dollar was backed by something, the dollar would be considered a legal tender that would be backed by a tangible asset. So in essence, the government wouldn't be able to just print money all willy-nilly, raise the prices of goods and services, which is essentially a raise in taxes every time they do it, and then devaluing your dollar. These are the things that you need to understand as you get into investing, as you get into financial education and financial literacy and things like that. The dollar being fiat currency is inflationary by nature. The dollar is essentially debt, right? You have the ability to create it out of thin air. You have the ability to increase the money supply or decrease the money supply when they feel the need to do so. So since the dollar isn't backed by anything, it isn't tied by anything, it gives the government, right, the ability to print the money, to control the supply of money that's in circulation in response to economic fluctuations. So it gives them the ability to not have to be better suited or better prepared or better handlers of money. They just have the ability to access exuberant amounts of money when they need to. All right, investing family. Peace.